Good morning, everyone. Hey, this is Rick Kaufman with LMA Trading here. It is Hump Day Wednesday, the first day of September, September 1st of 2021. Where in the hell did summer go? Oh, man, I tell you what, woke up, took the dogs out this morning. It's nice and cool outside, zero humidity. Um, Open the windows, turn the AC off. It feels like a nice September day. Love this time of year. Anyways, but hey, welcome to today's pre-market prep video and how to read stock charts. And it really starts with the pre-market. And I think pre-market is probably one of the most important parts of the trading day, and that is for a couple of reasons. One, to get your mind right, to get your attitude right, to get your bias right as far as what you think the markets are going to do, to help define some levels of risk and levels of support and resistance on the day, and then taking a look at your positions, and also maybe taking a look at some positions that you are thinking about. So I think pre-market is an extremely important time of the day, and skipping this process, I think, sets you up for a tough time. I know for me, that is the case. So, as an older trader and rather risk adverse, I find this part to be very important. I find that I do these videos as part of my trade journal and as far as my journey. And that allows me to, number one, build confidence, and number two, to understand a little bit better of what I'm up against on the day. So with that being said, let's get into some housekeeping. I don't give financial advice, and I do not, you know, I trade my own money. So I don't give out, trade alerts, things like that, but I do talk about trades. And if you choose to do any trade that maybe I'm thinking about, hey, you're doing that on your own. You understand that you trade your own money. You can lose every penny. Stocks and options have risk, and they're not suitable for everyone. And past returns and past, actions in the market are no indication of future results. But history does not necessarily repeat, but it does rhyme. So we're looking for some patterns. You're trading your own money, and yes, you can lose every penny of it. And so from that standpoint, if you understand that, then and you understand that I'm just sharing these videos as part of my journey. Whether or not anybody watches these videos or not isn't necessarily the important part. This just allows me an avenue, and putting it out there in the world kind of holds me accountable. Whether or not I'm holding myself accountable to my pre-market prep. So how do you read stock charts? So let's get into what I'm looking at here. I set up certain indicators, things like that, but how I turn around and read the stock chart is I look at the price action on each one of the charts, but also I understand with the price action, this really isn't about price as more as it is about people, and it's about people, and it's about people's emotions. So it's about other people that are doing pre-market prep and other people that are looking at the markets, and they have particular biases, and it's about being in alignment. LMA trading, like-minded adults, being like-minded with other people that are in the markets. So that's what I am trying to gain an edge on here in the market. So here in the VIX yesterday, the VIX kind of moved around a little bit from low 16s up into 17 yesterday. It dropped again, so really low volatility. If we stay down here in the 16, under 17, and we're probably going to see new highs today in the S&P, and possibly even in the Qs. The Dow has been consolidating. The Russell, we talked, we've been wanting to short the Russell, but I said if it breaks this area here, we're not going to get that. So let's jump into our pre-market prep here, and let's move over to the chart, and let's take a look at the Dow, the YM mini Dow Jones. Still extremely bullish trend. We're trading right here along the 1 ATR, but something that I noticed here on our Keltner channels, the 3 ATR is starting to curl in. So this range, we are in a weekly squeeze, so the range is tightening here on the weekly trend. So September's typically a historically has been one of the worst months of the year for the stock market. So when I'm looking at this here, with so the in the ATR channels, if you look at the 1 ATR, it's curling in. The 2 ATR is also, but the 3 ATR is really has a very pronounced hook in it, pointing inward. So, and not only that, but you begin to see on the long-term trend here that the Keltner channels are possibly leveling out as long, and also the 21. So our price action, our mean may somewheres here by the end of September may begin to meet up with price action, which I guess in some respects is not necessarily a dip, but a consolidation nonetheless, which could be setting us up for a great October or maybe November to the following, the end of the year. On the daily chart, we kind of see the same thing. The Keltner channels kind of pointing in here a little bit, as the 1 ATR line did cross above the daily 50, and so we are still consolidating here. The breakout of this wedge pattern here in the Dow just hasn't gotten the momentum. We are entering into a daily squeeze today, which would indicate that, with the Keltner channel, I can put the Bollinger Bands on here to show you the tightening. But again, that is what I am seeing here in today's. We have a red ready down here on the RAF indicator, so we may be reaching a point of kind of mid-level, or up here in the over sold area, kind of reaching a point of exhaustion. So we could see here whether or not it be today, tomorrow, next week, or sometime in September, we may see kind of a return to the mean here on the 21 on the daily chart. So now let's take a look at the Russell, the great little Russell. The Russell, again, I've been talking about this for all week, all last week. Russell put in a double bottom here. We expected, we were playing the Russell through here down, and then also chopped across. We played it down here. We were looking at a rejection of this area here. We kind of got it here one day last week, but then on Friday, it really popped and went above and closed above this level of support or resistance is now acting as support. So the Russell is gaining some steam here. So, we'll see how this goes forward. We've got a green power dot on today. So, the Russell, very well, I might look at this for a credit spread on the RUT, and which is very similar to the NDX or the SPX, but might be looking at this and maybe selling a credit spread somewhere down here around the daily 50. If we can get if the spreads are favorable, we can get a decent credit, maybe looking at Friday's expiration possibly. So this may be a very good area here, or possibly just below this resistance here, or the support level. So that's something I'm looking at here on the Russell. And then, but if you look here, the same thing, the ATR here is kind of level. The 3 ATR, the 2 and the 1 are pointing up. And so, the 3 ATR is a laggard up here on the upper side. So price action is looking to force this higher as we move through the day. So and that's based on pre-market and where we're at on the day on the Russell. Looks to be the same thing. So if I would wanting to play some small caps, I would be looking for stocks, things like that, that might set up chart setup looks similar to the Russell. And that would play into my hand as far as a high probability setup, looking at either credit spread or possibly a debit spread. Whichever the case may be, that would make sense in your setup. Let's jump over to the Qs. The Qs, again, the weekly chart. It looks a little different than the Dow. Everything's kind of pointing, if we were to draw arrows, everything's pointing in the up direction on the long-term chart, and momentum is good. So we are probably well on our way of setting a new high today. And so on the daily, the daily, we are rather extended. We're above the 2 ATR, hitting, probably going to hit up on the 3 ATR, and then it will probably reject there and hold on to those gains. And if we can hold that, level of support, what I'm looking at here, level of support would probably be right around the 15.4 area. So that would be a key level of support right in here, 15.450, 15.5 generally is what I would be looking at for a key level of support. And for the Qs, and then again, same thing as the Russell. I would be looking for plays that might look and mimic this. Would like to see some consolidation or possibly a small pullback. I think we're still going to get that. Could be later this week or possibly into next week. So again, I talked yesterday, and yesterday's theme was kind of caution in the market. I think we still need to be cautious because, like I said earlier, September typically, historically, is the worst month of the year. So I think this is a key area. And if, indicators are pointing to that, ticks and the, let's see, we also have got we are looking at our put call ratio, is there. Let's see, we also, and on our skew, we're also really elevated on our skew at over 155. So, so again, this market could sell off at any given moment and move us to lower levels, and give us the pullback. But in this market, it's been all about buying the dip. So if we'll see if we can keep buying the dip strategy alive going into this day here. Let's take a look at the S&P. The S&P is up around 15.5 points here this morning in pre-market. Again, everything indicating that we're going higher on the long-term chart, and momentum is good. The buyers are buying, and all the indicators are giving us on the weekly level, we sell, pull back, we buy the dip. So everything is about sell off, buy the dip, sell off, buy the dip, sell off, buy the dip, boom, just like an every other day type of thing. Yesterday was kind of a doji candle and inside day here. So the markets were relatively flat. I think we're going to get a little more price action out of today. I think we're going to go a little higher today, before maybe it stalls out here above the 2 ATR. We'll see, as we set a new high, and then that we could, so I got my eyes on about 4,600, and possibly going up to 4,600, maybe 4,650 is a level that I some key levels that I'm looking at here. Key level of support, about 4,500. So, I'm looking at selling a strike for SPX income trade below the 4,500 strike level. If we can get to the credit, that is good, possibly for anywhere from 3 to 5 to 7 days out into next week. Um, so that's kind of what I'm looking at here. Let's take a quick look here at a few of our positions. I've got a position on Tesla. Tesla's shaping up pretty good. It looks to be opening up kind of flat here this morning. We had a squeeze, a 3-day squeeze fired yesterday, 2 days ago, and we pushed to new highs, or a new high for that we haven't seen in several months. And so the 3 ATR is curling in, so that's going to probably give us a little bit of resistance. So that's indicating there's some resistance right here at the 2 ATR level. We'll see if we can push higher. Got my goal. I got my eyes set at 750 for a price target. We sold a 660 strike, so we're sitting great on this credit spread here, and so I'm not too worried about this here. We got still plenty of time on this trade, so we're looking for 50%. 50% is our target on our profit target on that. Let's see here. We got a position on Amazon. This is the one I want to talk about. Amazon right now is behaving like a beast. It's up roughly 20 points already this morning in pre-market. It closed right on its dead high yesterday. It closed at 34.70. I was looking at this level here. This is the 50% retracement level of the high to the low. We've already claimed 50% of the move of the drop from the high. We have our price target set right around 3,500, 3,550, right in here. This is the move that we're trying to capture. This move here, we put it on the low, and we're trying to capture that particular move there. So Amazon, I just wish I picked up a few more contracts on this, but this has been it's very, very stellar. It's not Amazon's not getting the love that I think it deserves at this level here. A lot of people are, I think, are going to start taking notice here. We've got, if you look at the momentum that, the volume yesterday came in about 4.3 million shares, up from 3.1 or 3.2 million on Monday. So Monday and Tuesday were big days. I think today we're going to see a push, possibly to that 3,500 level. So without a doubt, I think we'll take out the 3,500, or no, I'm sorry, 35.4, or to say that again. Yeah, but 3,500, I think we'll take that out. I was right the first time. This is definitely working extremely hard to fill the gap here. So I don't think Amazon's going to have any problem doing that, and very well could see this here by the end of the week, which would be a stellar win for us here. So again, high probability because because we set a double bottom here, here to here, and that is a strong level of support. But everything is pointing that we are going higher. So so this is not running out of steam anytime soon. We'll see how things kind of shape up through today into tomorrow. Then we added a position on Snapchat. Yeah, so we added a position yesterday on Snapchat on my small account. I took bought some calls on it. We were up yesterday. It pulled back into the close. Snapchat looks to be maybe pushing a little higher. I think everything here we are in the buy signal here as of Monday. So I believe that it is going to push higher. We have on our weekly, we have a buy signal here. And so I think the momentum is pointing in the right direction. And so we've got our target price, price target around $80. So we're right there. Like to see us get some momentum, and if we look at the Keltner channels, they are beginning to flare open. And so as I believe that being that we are in a weekly squeeze or daily squeeze here, looking at this squeeze to begin to pick momentum up, and we should get a squeeze to higher levels here. So looking for about a 1 to 2 ATR range pickup on this one here for a great base hit. And Home Depot, we talked a little bit about Home Depot yesterday with being a play for a hurricane play. Holding the 21, we closed a little bit below that yesterday, but we may push above here. So it's kind of in a tight range. So we'll see if we could get a bounce upwards. We're looking for this move here, back up to the highs, and so that's what we're looking at on Home Depot. Don't really have any trades per se. I mean, PayPal is one that we've been watching, and along with a few others like Apple. We've been watching Apple. We got a close on Apple yesterday at 150, 180. 83. So we are pushing higher this morning in pre-market. And so we are at 152 and some change. So, we're up probably about what looks to be about 50 cents here this morning on Apple. The squeeze did fire a couple of days ago. We got a great push. We just did not get the follow through yesterday, which I believe the markets held Apple back, but Google's being strong. Google's strong, and so is Amazon. I think they're going to push the FANG stocks. So keep an eye on the FANG stocks. Keep an eye on and they're going to be the drivers of the Nasdaq and the S&P here today. So. So with that being said, that's what I look at in how I read stock charts, and why I believe that pre-market prep is one of the most important times of the day, as far as preparing yourself, not only mentally, psyching yourself up also, but to get a good read on the markets of what you think might happen, so that way you don't react to your positions emotionally throughout the day, and then that way, if the trade is still valid, you stay in the trade. If the reasons for being in the trade that puts you in that trade is still there based on your analysis here, and then regardless of what might happen, you stick with that. You stick with that and let that play out. Give yourself the gift of time. So with that being said, you guys have a great hump day. Happy trading today, and we'll talk to you tomorrow.